Hello everybody and welcome to my channel. My name is Angelo and I decided to embark in this adventure after seeing a lot of videos by a lot of YouTube creators related to income producing strategies. They all show you these videos where they have like $1 million, $100,000, and they're producing $13,000, $400,000 a month, and they're using that to pay off the bills and live the good life and basically don't have to work. And I thought, wow, okay, how come that I haven't heard about this before? And what does it take to do this? I mean, what are the pros and cons, right? So I thought, you know what? Why not? I'm going to do it. I mean, I'm not rich. I have to work for the money. I've got a family. I got a lot of expenses. I do have some investments, but I do those basically, on a very passive way through my work, RSPs, and all those other Canadian investment products. So I thought, what would be the best way to do this, right? Obviously, I didn't want to invest in US dollars. I wanted to avoid as much as possible any FX, forex exchange commissions. I also didn't want to pay a lot of money every time I did a transaction, particularly because I'm going to be dealing very small amounts of money. Okay, like I said, I'm not rich. I don't have a lot of disposable income, so I had to make sure that I maximize as much as possible how I use the money. So I found this um, broker place that you can go and buy shares called Well Simple. Um, the reason why I found them was because I was looking for like commission-free trade, and they actually do commission-free trade. So I thought, great, I'm going to open an account. I'm going to put some money, and I'm going to start this journey and see where it takes us. And then I decided that I was going to share my story with you, share this journey with you. You know, with a real account made by real people. Um, the people that you find on the street, the people that are next to you drinking a coffee or in the supermarket buying some bread, right? Someone that it's actually a real person with real life problems, with bills to pay, and that doesn't have a lot of money to spend on a lot of things. So I started, I think it was January the 23rd. January 23rd, on the account, and I put 25 bucks. Probably the best way to see this is actually to go into this screen. Okay, so that was the first contribution. This is the stocks that I bought. More contributions. I do contributions bi-weekly, every 2 weeks. So basically, when I get paid, I put 25 bucks. I've had some extra money coming into the account. Friends of mine that wanted to do something similar. They used my referral link, so I got 25 bucks. I get 25 bucks. They get 25 bucks. It's a win-win situation. Eventually, I will put the referral link somewhere here. By the way, I'm not very familiar with YouTube and all that stuff, so you will have to excuse me if I screw up in some ways. I know there are things that you have to do in order to um, follow notifications and something like that, but I will figure that out with time. Yeah, so we go paid some dividends. I was actually pretty impressed. Like, I got paid enough to, let me see, could I buy a coffee? Yeah, I could actually buy a coffee at Tim Hortons. I think I can get myself a double. Yep, yep. And I thought, wow, okay. I mean, obviously, right now the markets are pretty bad. I've invested a total of 400 bucks, and the value of my portfolio is 387. So I've lost around $13 since the very beginning, and I definitely have not made $13 in dividends. I don't know if Well Simply calculates the portfolio value, including the dividends or not. That I haven't got a clue. I'll figure it out one day. And then you're probably wondering, okay, so how did you choose the assets that you chose to invest in? So obviously, based on what I was seeing everybody else doing. Oh, and by the way, I have to tell you, this is not financial advice. By all means, do not do what I'm doing. I haven't got a clue what I'm doing. Okay, this is just a personal journey. I'm just experimenting, maybe probably throwing money away. Hopefully not, and see where it takes us. This is a long-term journey. This is not like a couple of months and we're done. No, no, we're in here for the long run. This is going to take a few years. Uh, I'm going to try whenever I can to put extra money just to build it faster. It's not a guarantee, but if I do, you'll see it anyways when we do the reviews. So what I did when I was trying to choose, obviously I saw what everybody else was doing, right? Like I said, most of the people invest in these US companies, Yieldmax, Curve, um, Roundtree, Hilltree, Roundtree, something to that effect. But I didn't want to do that. I didn't want to invest in US dollars. I wanted to make sure that I didn't incur any expenses that were not necessary. So I was looking for equivalent of Canadian stocks. Obviously, the Yieldmax stocks, they give like 90%, 80%, 100%, like something like wow, what the hell? But for what I've seen, the NAV gets a roll too, pretty fast. While most of the Canadian funds that I have chosen, they seem to actually grow with time. So it's a double whammy. So on one hand, you get reasonable high dividends, and on the other hand, you get capital appreciation by having the value of the fund grow up in time. Is it true? Is it not? I don't know. I'm only 3 months in, and right now I'm not making any money, so I can't really tell you with certainty. So what I did is I wanted Bitcoin exposure. I don't know why. everybody, everybody and their mother is talking about crypto, Bitcoin. I still haven't got the foggiest as to what exactly uh, crypto is and how's it going to benefit us, right? All I know is that it's everywhere. So I thought, you know what? Let's let's invest, right? Not a very big position, not a very big position. I've got my positions broken down right here. Okay, right here. There you go. So I wanted 5% in total, right? So 5% of everything that I buy, I'm going to put it onto Bitcoin. So basically, I have 80% of the value of my portfolio is made up of these holdings, and then I have an extra 20%, which are made of these particular holdings, which focus on specific securities, right? Which these ones are considered to be high risk because literally, if the asset goes up, they go up a little bit, but if the asset goes down, they go down a lot, right? So this is very good for a bull market. I don't know how good they was going to be for a bear market, which I believe it is where we are right now. So I thought, you know what? Why not? 20%. Let's see what happens. I know that the company, and we'll say it in a minute, that has set this up have now others for other companies like Costco and things like that, which I think that eventually I want to add. But right now, this is currently my breakdown of how much of each securities I want in my portfolio. And this is obviously subject to change. Like I said, I went through all of these, I looked at them, I thought, sure, why not? And I picked them up. I may remove, I may add, as time goes by, and if I see that I've got redundancies, then I may eliminate or I may add others. I mean, right now I haven't got a clue. Anyway, so I wanted Bitcoin, so I went with Purpose Investments. It's the only one I could find that kind of like when I was reading the documentation, it kind of like made sense. Obviously, this one really doesn't yield anything back to me. Okay, so it's whatever I put in here, it's zero. It has a 1% management fee, which apparently is high, but I haven't got a clue. I don't really know exactly how this impacts me or not. what I was happy to see is that whatever money that I put in, it's actually buying me Bitcoins, right? So I've got a share, and if I own a share, I owe 0.000128803 Bitcoins, okay? And I will need to buy 7,810 shares to owe 1 Bitcoin. So I thought, okay, 5% Bitcoin. Why not? Hey, you know what? If in 5 years' time, 1 Bitcoin it's worth $500,000, I'll be laughing all the way to the bank. The next thing I wanted to do is I wanted to invest in Europe. But I couldn't find really a fund that was solely focused in Europe that gave me a high enough yield. So then I found this fund, EBNK. It focuses mostly in European banks, okay, which, I'm familiar with them. I was taking a look at the holdings, and it's actually pretty much all over Europe. It's got the UK, it's got France, Spain, Italy, Sweden. It's pretty much all over the place. And if you take a look at some of the banks, like me, I know CaixaBank, it's a Spanish bank, Banco de Santander, Banco de Bilbao, obviously Societe Generale, which is a French bank. So these are banks which have been there for a very, very long time, right? They've got very good numbers. They're very sound. So I thought, why not? And then if you take a look at how European banks have been doing lately, well, North America has actually been like crushing. European banks have actually been going up. So I thought, you know what? This is actually not a bad idea. So I invested in it. Then the next one that I picked was HDIV from Hamilton ETFs, right? The reason why I picked this one up is because most of the holdings, so this is a fund of funds, right? It has a diversity of other different funds by Hamilton. And the reason why I like this is because it really picks up everything. So it's got, technology, Canadian financials, obviously, energy, gold producer, utilities. And if I took a look at how this fund has been doing through time, it's been doing pretty well. Like, unlike many of the high yield funds that I see in the US, this particular fund has actually increased in value. And the yield is pretty good. The yield is like 11.66%, which, you know what, for $17, this is actually a great return on your money. So I thought, why not? So we put HDIV. And then, while I was looking at HDIV, then I saw HYLD. And I thought, oh, hold on. And this one is actually focused on US. So it's got everything that HDIV has, but it's actually focused with the US. So it's got US equities, US financials, it's got, US bills, US bonds, etc., etc., etc. So I thought, you know what? Why not? Okay. It's been giving very good distributions too. And what I noticed that these distributions tend to be pretty stable, unlike what I've seen for like the American funds, which they tend to give you different amounts every month. Some months could be very good, some months could be very bad. These ones are actually pretty stable. It's like month after month, you can say, yeah, and actually went up. So why not? And you can take a look at the total returns in 1 year. So, I mean, okay, sure. Last couple of years in the US have been great. But in 3 years, 7% increase. So not only are you getting paid a dividend, but it's actually, increasing in value. Yeah, not bad. Then I went with Harvest. Now, Harvest is probably the riskiest part in my portfolio, right? These are funds that give you a higher dividend payment. Okay, so I've got pretty much, I think, all of this, and this is part of my 20%. As you can see, the payouts are pretty big. Like Palantir gives 37 cents, Tesla 32, and then they've came up with these ones. And I want to add to that 20%. I want to add Google. I want to add Costco. Right, the payouts are a little bit less. Okay, but I think it makes sense to have those. I think I'm going to add them, and then I'm going to see if it works or not. Then I found QQCL, right? Which is literally concentrating on the Nasdaq. Now I know a lot of people. There's a lot of doom and gloom out there. You have to not listen to what everybody's saying, because if you listen to what everybody's saying, it's a depression guaranteed. I still think that the Nasdaq has a role to play. Most of those companies there are really, really like at the top of the field. So I thought, you know what? I still think America. I still think as America is the force that drives going to drive technology in the future, right? I know the Chinese are developing their semiconductors. I know that well, Europe is lagging behind like crazy. Uh, Israel actually it's pretty good. I just saw an advertising that Google bought an Israeli company that dealt with security or something like that. So I may think maybe I don't know. I don't know. Time to time. So I thought, you know what? Let's choose this particular fund, QQCL. It concentrates on the Nasdaq 100. It's got a very good yield. It's got a reasonable price, right? With my $25, I can buy one share. Because really, that's what we're aiming for. We're aiming every 2 weeks to at least buy one share of something. Um, and really, when you take a look at the holdings that it's got, so it's divided between all these different sectors, and it actually has some exposure to other countries. Very little to Canada, which is great because HDIV already takes care of Canada, right? I know that HYLD takes care of the US, and there's probably some duplication here. So we'll have to see how it pans out. So we'll see. We'll see. And then when I was looking at this, then I found USCL. I thought, oh, so this is like literally something that covers the SP 500. Good yield, again, reasonable price. Right now it's going down, so it's fantastic for me because, to tell you the truth, one of the things I notice is that you don't set up this kind of a strategy if you're worried about the price of the holdings that you are investing in. Literally, for you, the lower the better, particularly when you are on the build up phase, right? I think this strategy, and I haven't really, really thought about it, but I think this strategy has different phases. You have the build up phase, where you build your portfolio to the level of income that you're looking for, right? So let's say, I mean, right now, really, I don't have a goal, but let's say $100 a month, right? So you build your portfolio to $100 a month, right? And then after that, once you've reached that, then you think, okay, now we're going to use those $100 a month and we're going to invest on something else. Maybe you actually invest in funds that are actually just growth, which don't pay you any dividend, right? But just concentrate on growing through the years, right? Or maybe you invest in something totally different. Or maybe you reinvest in what you have in order to have, instead of $100 a month, $200 a month, or $300 a month, or $500 a month. I don't know. It's all open. It's this is very interesting. And then the last one, it's another purpose fund. And it's so funny. When I was looking at all these videos, I kept hearing talking about this like the Seven Magnificent, and I thought they were talking about this Western with Yul Brynner, which I thought it was very weird because this is people in finance YouTube talking about, and then start talking about Yul Brynner and like the same, like no, it's just this not. And then I realized that they were talking about these companies, right, which apparently are supposed to be like, you know, the seventh of magnificent. And I found this fund that actually invests in this company. This is all they do. So I thought, you know what? Okay, why not? We're going to put it on the list. We're going to see how it works. If it works, great. If it doesn't, then hey, it is what it is, right? They invest in call options. I think this is going to be a high risk one. I don't even know if they actually own the securities. Do they own the securities? Pum, 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 pum. Yeah, I don't know if they actually own the securities or they just do call options on them. I guess you could really read on the brochure and see what the brochure says. Ba-da-ba-ba-ba. Oh yeah, Portugal. Oh, say so they do own shares. Okay, and then use a 25% leverage. Okay, okay, nice. I didn't know that. That shows you how much research I did. And here we are. So, my plan is to do one of these videos every couple of weeks. So basically, whenever I put fundings in, we'll go, we take a look. Right now, as you can see, on the past 3 months, actually, we're down 6%, which, to tell you the truth, when you think about it, you take into account how much the market has gone down. 6% in the past 3 months is not the end of the world, right? Obviously, I'm buying one share. FTN. What the hell? Oh, yeah. Okay, hold on. I did buy some shares, which I actually don't want to buy anymore. So I'm actually not going to invest in these ones anymore. This is just when I was doing my experiment and see what I like, what I didn't like. Yeah. So BMAX, FTN, what else? HMAX, QMAX. These ones are holdings that I'm going to eliminate. So eventually I'm going to leave them there right now. I'm not in a hurry to sell them. Let them pay me every month. But eventually I will be getting rid of these ones and just keeping the list that I shared with you before, which is going to be this one. This is the final list. So yeah, so that's what I'm going to do. So thank you so much. Hopefully you will join me in this journey, and I will see you all in a couple of weeks for the next video. Oh no, actually not in a couple of weeks. I think it's next week. All right, take care. Thank you. Bye.